Welcome back, passive income investors alike. Today I'm breaking down healthcare, real estate, well actually senior housing property trust as it's well known, ticker symbol SNH on the NASDAQ, a stock that comes up every time I mention REITs or I ask somebody what they think the best REITs are, and even in most articles you Google mention this because of their whopping 11.8% dividend yield, guys, which ding, ding, ding raises some red flags, which makes me want a deep dive. So let's get right into this one, guys. I am super looking forward to this because this is one that has actually been on my watch list for years and I've never considered buying it. And I'm just going to quickly go over some stuff and ask you guys some questions. And because I do not own this, I'm going to be a very outsider looking in perspective. That means there's no capital gain for me in this. And we'll start with their website. First of all, most people know this company for senior housing, but senior housing isn't the majority of their income. They actually make just as much off renting healthcare offices and things of that nature. Now, you have to let me know because I know like retirement homes require people that need full care, and I'm not sure if that's what they offer here. I'm kind of curious to what kind of senior housing properties they actually help people with and rent to, and what they charge for that, because their books have me questioning some things, which we'll get into very shortly, guys. But let's take a look at their properties here, shall we? So the impressive thing here, guys, is when you take a quick peek, you're going to notice they have 443 properties all across the U.S. They built this nice little map, beautiful website, by the way, for kind of showing their assets and how they're spread out and where they are most dominant and what kind of they offer. Their basic things they clearly offer are senior living communities, medical office buildings, wellness centers, and skilled nursing facilities, which seems like a nice diversification. Honestly, every time I look at REITs, especially with GEO, which is one I talk about here a lot, guys, prison real estate is so ugly. They don't care that they're going to show you the prisons because they're going to try and clean the insides up a bit, make it look real nice, but the outsides look like shitty real estate. But the income and the return they make is muy bien, guys. It's beautiful. And that's what I like to see is I want to see your worst piece of real estate, and I want to see what you do with it and how much money you make off of it, because that truly tells me your skill when you're showing your best properties, guys. But that's just what they do, guys. So always be careful when you're looking at this. When you have 400 properties, don't show me your best. Show me your worst. I want to see what the average location is doing for you guys. There's not much else on this website I want to look at. When we talk about careers, especially with a company this big, it's always nice to go on to the reviews, guys, which I have open here somewhere, and just read what a few people say about these companies. It's nice seeing an insider's perspective, especially when it's this easy. To take a quick peek at their dividend history, a company like this that pays out a whopping 12% at their current yield, you'll notice they don't do a lot of dividend increases. In fact, the last time they increased their dividend was in 2012, which some time ago that was, guys. And back then they seemed to do quite a few dividend increases, but honestly I feel like that would just be making up for the capital loss this company has been experiencing lately. But that's also the reason their yield is so high and why I am taking a deep dive into this. So their dividend history goes back quite some ways here, guys, all the way to 2000. And somewhere around here you'll notice, I do believe there was a year here where they actually missed a couple dividends. They had to pull back and they didn't actually pay a couple of the dividends. But this company's got a good track record for paying out a decent yield. It really makes me want to take a look at their books. So let's just quickly dive into how they're affording this, guys, and how they're sustaining this. And I'm going to go on to Scotia iTrade, and you'll notice the volume right away is very impressive. Again, really impressive dividend, $3.1 billion market cap currently, and a really, really low PE in my personal opinion. The PE is unusually low, but when we look at the charting, this is where things get super interesting to me, guys. And the dividend yield, I don't know if it's worth the downtrend that you've been getting here, because as a passive long-term dividend investor, I don't want to take this kind of risk if I'm losing half of what I'm making in dividends anyways. If you did buy this, you've been making good dividends, but you've lost, like, again, let's see if you bought it even at the lowest point here since 2006, what would you have paid? Maybe like $18, and now you're down to 13. Sure, your yield would come closer to that, 6 to 8% mark. I think, just running some numbers in my head, I could be wrong, But why would you want to own a company that hasn't increased that dividend? Again, if we're talking about companies and dividends, like MO guys, a company that if you bought 10 years ago, you'd be making 20% return on your investment today, which is crazy. But this company, for a REIT, if you wanted some capital up front, that's why it's so interesting. But again, ding, 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 a 12% dividend yield sends some red flags. So let's just take a look here, guys, their fundamentals and why this company has been going down so much recently. And I don't like Scotiabank, because Scotiabank on some companies like this don't tell me enough information. There's not enough here. But if we go to their cash flow, we can see a little bit of information from 2015 to 2017, which does show some whole lot of nothing in cash from operating funds. Not a lot going on there. Cash from investments have actually decreased by the looks of it, which isn't the best thing, but I think they've been selling and managing some properties, and they have a lot of capital right now, from my understanding. I think they got something like $1 billion in debt that they're able to utilize, and they have 800 million of it still available to them, and they have been moving properties around. But this leads me to want to look at their website fundamentals, which we're going to head over to right now. We've done the dividend, we've looked at that. This is where things get interesting to me and that I find very confusing. Like I said, some of the basic information I've read has told me that they are actually, they've sold off some properties. They're looking to do some new acquisitions, and they have a lot of capital available to them, which might explain why they've been going down recently. But the thing that also confuses me when I was looking into this balance sheet is, let me take a quick peek here. Where do we find it? Gains of sales, dividend income, not what I want to read. There's a small thing here. We got assets, their total assets. You're sitting at around $7 billion, which isn't terrible. Total liabilities of $4 billion. So you're looking at almost just about 50-50-ish, which is a little high for most REITs. Usually you like to see REITs that own a little more of their properties than a 50% leverage, because that means they're going to be affected by interest rates. Because this company, I don't think has permanent fixed interest rates. So, I mean, you're going to see if something happens, you could see it directly affect the dividend in the stock, because the payout ratio on this is almost at 100%, which means they literally almost pay out all of their income. But honestly, for a REIT, that's kind of what you want. I always figured you'd want a company that pays out most of their dividends. I mean, it seems more reasonable. And I mean, if things fluctuate, you just get to experience it instead of them cushioning it for you by deleveraging in other ways. But the thing that I found weird about this, and I got to find it here, guys, when I was looking at, we got residential fees, property. Oh, here we go. Operating expenses. Things got really confusing to me, because when we look at general administrative right in the middle here, for some reason, you can look at the 3-month end and the 9-month end of September 30th, guys, that their general administrative expenses have exploded. And I don't know why that is, and I'm curious to the actual properties. Like I've said, that they're long-term care. Are they actually paying? Because usually long-term care is expensive because you need people all the time that are helping you. So I'm just curious if that's what they mean by senior living. Like, are they actually giving these people like the help that they need? Is there extra care? Is it higher rents? And have you had to pay more administrative fees? I just don't understand why these are so high, unless it has to do with the selling and moving around of the real estate. But we've noticed one heck of a spike in costs for general administrative, which sets a red flag off to me, guys. I'd have to do some deep dive research, but that's also why you're here, guys. I want you to let me know in the comment section below what you think about this company. Do you own this company? Do you like it? Would you consider buying it? I'm kind of on the fence with it, and I'd have to do a lot more research before I'd feel comfortable buying it. When it comes to companies like this, guys, I need to be able to easily understand the math in my head. I need to actually understand how the company works, or I can't run the numbers, and I hate having blank spaces in my mind when it comes to the things that I own. I need to actually understand the assets, how they produce income, and that'll give me a better understanding of the risks versus the rewards, and you'll get a better overall picture in your mind, because just analyzing through this doesn't give me a good feel, because again, I'd have to do a deeper dive to actually understand how much they're actually making and paying how much these people that are renting from them are actually paying for these units. When it comes to real estate, I really like analyzing everything that goes on with them. Like I said, the only REIT I own right now is GEO Group. Really easy to understand their numbers, how they get paid, and their biggest risk. If you don't know what GEO Group, it's a prison stock, guys. I talk about it all the time. Far too much of anything. But I just like the fact that that they're getting their money from the government, which is their best thing and their worst thing, because if the government does any budget cuts on prisons, well, you're going to feel it immediately on your equity. So, I mean, that is the risk, but at the same time, the reward is you're guaranteed a paycheck and no one can really enter your market. You own it. It's a hard barrier to entry, which makes the dividend, in my opinion, very reliable at an 8% yield. Any company, guys, that pays over 8%, please do your homework, because usually there are red flags in between. And when a company that's this big, that is mostly institutionally owned. I don't know where the chart is. There's some good read-ups on this. You can check out the Motley Fool and Senior Housing Property Trust. Is it a buy? And just run some numbers through this, guys. Read through this. It gives you a lot of interesting information. But this company is mostly institutionally owned. And when you look at this chart, guys, over the long term here, you really got to come to understand that, back to the charting here, that there's just something odd about a company that has depreciated this much in this amount of time. And again, red flags, guys. You should do a deep dive and try and figure out why this is. It makes me very curious. And maybe it's just been an oversell kind of company, and now might be a good time to enter. I'm going to let you decide that in the comment section below, guys. But I hope you enjoyed this really quick deep dive on this really interesting company. Stay cool. Stay awesome, guys. And I'll see you tomorrow.